In week 1, our course will cover the basic lingo, terminology, and principles of federal taxation. Basically, what is a tax, who can tax me, and how can they tax me? In this first video, we're going to look specifically at those first two topics. What is a tax, and who has the authority to tax me? To illustrate how taxation impacts our lives, we're going to look at me as a case study and two decisions that I could make in my life that would be impacted by the federal tax law. The first of these two decisions relates to my employment. Let's assume that I'm an accounting professor and that the going rate for accounting professors is around $100,000, which makes the math easy. I'm considering employment in 3 cities: Abilene, Texas, Harrisonburg, Virginia, and Amsterdam, the Netherlands. Purchasing decisions also require consideration of the taxes. And to illustrate that, we're going to look at my dream purchase, the purchase of a 2019 Corvette Stingray, hopefully when I make tenure one day. In order to understand how taxation decisions impact our life decisions, we first have to get to the basics by defining what is a tax and who pays taxes. A tax is a payment intended to support the cost of government. That is, our taxes subsidize public goods and services. In the second chapter, which we'll cover in week 2, we'll discuss the philosophy of taxation and why these public goods and services are necessary and how our tax policy reflects that. A taxpayer, then, is any person or organization who is required by law to pay tax to a governmental authority. Now, by person, we mean both human beings who work and earn wages, who buy cars, and who stay in hotels, as well as corporations that also earn revenue and are taxed as though they are real persons. The focus of this course is individual taxation. So we won't get into the corporate laws, except in the few ways that they intersect with individual taxation. A tax is not an assessment of benefits, a fine or penalty, or a user's fees. These are amounts paid in exchange for a direct benefit. A tax is the means by which we each, in a civilized society, pay for the benefits of government. And there are benefits, like nice roads, public parks, and an educated society. Let's check your comprehension. Is it a tax? The sales tax portion of the tax, title, and license that I would pay when I purchase my Corvette. That's right. The sales tax portion is a tax. And in the second part of Chapter 1, we'll get into the jurisdiction of taxes and who and how can tax me. But for now, know that a sales tax is a general tax and not a privilege for a specific action. Item number 2, the license portion of the taxes, title, and license paid upon the purchase of my Corvette. Is it a tax? The answer is no. A license is a direct benefit. I pay to get my license to operate the car in exchange for operating my car. It is not a direct tax. And finally, the amount paid to the state of Virginia based on the market value of my Corvette. Is it a tax? The answer is yes. The state of Virginia imposes property taxes on cars, and these taxes go to pay for schools and other services. Therefore, it is a tax. It's not a pay for benefit. So throughout this text, we're going to talk about a couple of different types of taxes. An activity tax is a tax that is imposed on the cumulative result of an ongoing activity. Income tax is the most notable kind of activity tax. These taxes require record keeping, summarization, and eventual payments. A transaction tax is a tax that is triggered by a specific event or activity, such as a sale or a death. There are also hotel taxes and liquor taxes that fall into this category. By linking a tax to a given event, you can potentially avoid such taxes. You can't avoid death, but you can avoid buying alcohol or staying in a hotel or renting a car. Finally, an earmark tax. This is a tax that is specified for a given purpose. For example, most local property taxes cover the school system. So raise in property taxes intends to increase the revenue going to our public schools. The great thing about income taxation is that as long as you can add, subtract, multiply, and divide, you can do all of the math required for this class. Like I said in the introductory video, taxation is not accounting. So every math formula we're going to perform in this class is some variant of the one at the top of this slide. Tax revenue is a function of the tax rate multiplied by the tax base. Now what does this mean? The tax base is the item, transaction, occurrence, or activity on which a tax is levied. So for instance, an income tax is a tax on my income. And we'll get into some of the exclusions and the deductions later on in the course. The tax rate is the percentage of the base that is owed to the government. There are a number of different rate structures in existence, and in Chapter 2, which we'll cover in Week 2, we'll get into some of the philosophical manifestations of the different rate structures. But for now, it's enough to know that a flat tax involves a single rate, and a graduated tax has multiple rates. And finally, the tax revenue, denoted by that equation, is the total tax collected by the government and available for use. So let's practice calculating the tax revenue. If I accepted a professor job at James Madison University in Harrisonburg, Virginia, the state of Virginia has a progressive tax structure, as shown below. My income of $100,000, if I accepted the job, falls into the largest income tax bracket, this one here, which means that my income tax payable is $720 plus 5.75% of anything I make over $17,000. This means that I pay 5.75% of $83,000, which is approximately $4,700. This gets added to my base tax of $720 for a total of $5,493 tax dollars owed to the state of Virginia if I were to accept that professor job. Let's look at another example. The state of Texas does not have a state income tax. The state of Texas instead relies on primarily its sales tax. But even in the state of Texas, you're required to pay your federal income taxes, including a tax to pay for Social Security and Medicare. What would be the tax revenue owed to the federal government if I accepted the professor job at McMurry University? The math on that one's a little bit easier. 7.65% is the rate. The base is $100,000. So therefore, the tax is $7,650. The final tax vocab term we'll go through in this part of Lesson 1 is tax incidence. Tax incidence refers to the person or organization that ultimately bears the economic burden represented by the tax. For example, if a city raised the property tax and an apartment complex raised the rent on all of its occupants to cover that tax, the persons who ultimately bear the burden for the tax are us, the consumers. If a state raised the sales tax and as a result, merchants raised their prices, we, the taxpayers, would bear the burden of the tax. But in other cases, the burden of the tax is borne by a different recipient. The examples that come to mind are the ones that impact us personally. So let's look at who bears the burden of this example of a tax. If the state of Texas were to increase the percentage of gross receipts they required from vendors, and I now pay more for a gallon of gas to operate my Corvette than I would previously, who would bear the burden of that tax? Well, the answer is me. In this unit, we covered what is a tax, how we calculate tax, and who is ultimately responsible for bearing the tax. As we move to the second part of this chapter, we'll look at who has the jurisdiction to tax me and how they tax me.